have a question for you. If your payment processor wasn't paying out everything that you had earned, would you notice? Maybe if your daily sales volume is lower, you would notice if you were shorted on a payout by, say, $50. But what if you're used to $1,000, $5,000, or $10,000 sales days? Would you notice a missing $50? Today's topic is going to help make sure that you are receiving all the money from your payment processors that you are entitled to. This is the only way to double check that all of your money is accounted for and everything is recorded accurately. So let's dive in. Hey there, and welcome to the Boutique Bookkeeper Show, where we take the mystery out of your money and make your numbers make sense. I'm Megan, virtual bookkeeper and bookkeeping coach, and I love helping female boutique owners just like you finally feel confident about the financial side of your business. If you're tired of feeling anxious every time you have to open Quickbooks, or if you're making sales but constantly left wondering, where did all that money go? You're in the right place. We'll cover all things bookkeeping and taxes, all in plain English, so you can be less intimidated by the numbers and finally start to use them to help you grow a profitable boutique. So, if you're ready to stop avoiding this whole numbers thing and start keeping more of the money you make, grab your coffee and your calculator and let's dive in. Hello, and welcome to another episode of the Boutique Bookkeeper Show. I'm Megan, and today we're going to be talking about a common bookkeeping term known as a reconciliation. I know it might sound complicated, but I promise it's not that difficult. Simply put, a reconciliation just means that you are reviewing your bookkeeping for accuracy by comparing your own bookkeeping records to the statements provided by your bank, credit card companies, and your payment processors. But before we get into the nitty-gritty details of how you actually do a reconciliation, I want to pause and tell you a couple stories to help you understand why this process is so important. So when I first started my business back in 2021, one of my very first clients was a brick and mortar retailer, and she was actually referred to me by her current bookkeeper at the time, who was just shifting gears a little bit in her business and was trying to help this client find her own replacement, essentially. And she was upfront with me in saying that some things were missed, that she had connected the point of sale system and honestly just made a mess of her QuickBooks, and she just didn't have the time and capacity anymore to tackle this. She was looking to hand it off. All of that to say, she was working with a bookkeeper. So that is very important to just kind of keep in the back of your mind as I continue telling this story. So as I started going through that store's bookkeeping, categorizing all the transactions from the past 7 or 8 months, entering all of the monthly sales data from her point of sale system, and once I got everything entered, I started this reconciliation process where I was reviewing everything for accuracy. I started with January of that year, and I would compare my numbers that I had entered into her QuickBooks to her January bank statement, then her credit card statements, and finally I got to her payment processor statements and reports, such as, PayPal, Sezzle, things like that. And I very quickly realized that the payments that she was collecting via Sezzle, they weren't being deposited into her bank account. And I didn't think too much of it right away because it wasn't a huge amount for her. It was maybe a couple $100 or so a month. But the balance just kept growing and growing on her balance sheet as I kept reconciling her Sezzle accounts. And once I got caught up with all of the 7 or 8 months of data and reconciliations, and I confirmed that I hadn't been seeing any of those deposits come in, I reached out to her to question it. The access that I had at the time didn't allow me to see balances, only the transactions in Sezzle, so I couldn't confirm this for my own. And honestly, being new to the retail industry, I just wasn't honestly even sure how Sezzle was supposed to work in regards to their point of sale system and their bookkeeping and how it all flowed together. But I questioned the owner about the missing Sezzle payouts, and she texted me back a little bit later, and she was shocked at what she discovered. When she logged into her Sezzle, she had nearly $20,000 sitting in that Sezzle account, and she had no idea it was there. She had this account open for several years, and like I said, the amount she was collecting, it was, a couple $100 each month, but she was a pretty successful brick and mortar business owner where she didn't even realize that that amount wasn't being deposited. She was under the assumption that since it was connected to her point of sale system, all of the payments were flowing through there and deposited with all of the rest of her point of sale payments, that she just didn't even realize that was missing. And remember how I said she had a bookkeeper before too? Even her previous bookkeeper didn't realize that these payments were missing because they were not reconciling her payment processors. So it's very common for people to, know that they need to reconcile their bank accounts and their credit cards. But in the retail industry, it is just as important that you are reconciling your payment processors so something like this doesn't happen to you. Another example of why reconciliations are so important actually happened a little more recently. Just in the last couple of months, I started working with a newer business who recently connected her TikTok shop to her Shopify, but she just kind of misunderstood how all of the operations side of it needed to work. So the order comes in via TikTok shop, it syncs over to her Shopify. She was fulfilling the orders in Shopify, but she didn't also mark them as fulfilled in TikTok. And as a result, TikTok was refunding all of her customers for unfulfilled orders when in fact she was shipping them their products and just noting it in Shopify. But this process of me reconciling her TikTok payments, that was actually what helped us catch that how she was handling it was incorrect, so she could fix her process and make sure that she receives any of her future TikTok payouts. So I hope that by these two examples, I've helped maybe convince you that this process of reconciling your accounts is super important. Reconciling your bookkeeping records is really the only way to make sure that everything you are putting into your bookkeeping records is accurate. And after all, you're going to be using this information to file your taxes and help make important decisions in your business, so you want to make sure that the data is accurate. Being able to reconcile or simply match the information that you have in QuickBooks to your statements will help ensure that nothing has been missed or duplicated in error. Even if you have all of your bank accounts and credit cards connected in QuickBooks, reconciliations are still super important because those bank feeds are not perfect. They glitch, sometimes transactions will be pulled in twice, or sometimes they miss being synced over altogether. And I'm going to note that if you're doing your bookkeeping in a spreadsheet, there's really even not a good way to reconcile that information without doing it manually and comparing every single line on your spreadsheet to the statements provided. But the good news is, if you're using a bookkeeping software like QuickBooks Online, which I highly recommend that you do, they make it super slick, so this process of reconciliation or reconciling takes very little time to double check your work. So, how do you actually go about performing a reconciliation inside of QuickBooks Online? So once you are logged into your QuickBooks Online, I will preface this by saying QuickBooks is always kind of changing the navigation a little bit, but as of the time of this recording, to find the reconciliation screen, you are going to go to the All Apps menu on the left-hand menu option, then go to Accounting and Reconcile. If for some reason the screen isn't there for you, you can always use the search bar at the top of your QuickBooks Online and just type in Reconcile, and it should pop up as a jump to this page option, and you can just click on it there. So as you get started, you're going to pull out all of your monthly bank and credit card statements for the current year and also your payment processor statements. Not all of them provide statements, so I'll get to that more in just a little bit. But once you have all of your available statements, you're going to start with the first statement of the year, because in reconciling, you have to go back to the first date and work your way forward. So you're going to start with the first statement of the year and find the ending balance of that statement and then the statement date. And on that reconcile screen, you're going to enter those two pieces of information and then click Start Reconciling. On the new screen that pops up, you're going to see a list of all of the transactions that are unreconciled through the statement date, which simply means that they have not yet been matched to a transaction on a statement. And just a quick note here, if you have never done a reconciliation before, you might see transactions on this reconcile screen that are years old. So one thing that I always recommend, and what I do if I take on a client that hasn't ever done reconciliation, I will do what I call just a bulk reconciliation. And I will actually start by entering the beginning balance on that statement and entering the statement, the first date of that statement period, and just do a bulk reconciliation to clear out all those old transactions. If all of the transactions do not reconcile to that beginning statement balance, you can do an adjusting journal entry. And if you need help with that, please feel free to reach out to me via Instagram and I can kind of help you figure out that process. But that is a great way to clear out all those old transactions, especially if you've done taxes for those years. You don't want to be messing up any of the data in those years, but there's an easy way to kind of clear everything out. It's just a little easier to talk through on a case-by-case basis because how you do it will vary slightly. So anyway, all of that to say, once you clear out those old transactions and are just working on each month's reconciliation, you will see all of the current month's transactions listed there. And if the transaction was added from a connected bank or credit card feed, the line item should automatically be checked off. The goal of a reconciliation is to get the green checkmark icon in the top right-hand corner and for it to display a $0 difference. That means that the total deposits and withdrawals in your QuickBooks matches the totals reflected on your bank or credit card statement, and that's the goal. So that process is more specific to bank and credit card statements where you have a physical statement in front of you or something on your screen that has the ending balance and the date. But what about payment processors? As I mentioned before, they are just as important as all of the other accounts that you can reconcile. So if you utilize Stripe or PayPal, those two processors do provide monthly statements that make it super easy for you to reconcile those accounts each month as well. But what about other processors such as Shopify or Sezzle or Square? In those cases, there isn't a great straightforward report, but you can use the transaction reports from those platforms to see what is in process at the end of the month, so you can kind of figure out what your ending balance is. Shopify and Sezzle for sure, they have a transaction report that has the paid out date, so you can figure out what transactions fell in the current month that weren't paid out until the following month and total up the net payment amounts, and that is your ending balance that you will enter on the reconcile screen. But the process of reconciling those accounts is the exact same way in QuickBooks. You enter in that calculated ending balance, the ending date, and just like all of the other reconciliations, your goal is to see that green check mark once everything is checked off on that screen. All right, so just a quick recap. We talked about what a bookkeeping reconciliation is, why it's important, and what kind of things you can discover by doing them. And then we covered exactly how to do a reconciliation in QuickBooks Online. So I want to challenge each of you to start making sure that you are reconciling all of your bank accounts, credit cards, and payment processors each and every month to make sure that all of your hard efforts that you're putting into your bookkeeping are actually producing accurate reports for you, and they are useful in helping you run your business. So that's all that I have for you today, but be sure to tune in next week for another episode. I'll see you there. Hey there, and thanks for hanging out with me today. I hope that I shared something that helped you feel just a little bit more confident in understanding all the numbers in your boutique business. If you found this helpful, don't forget to go and leave a rating and review on Apple Podcasts. That's the best way for other boutique owners just like you to find this podcast so I can help them feel just a little bit more confident in their numbers as well. If you have any questions about what you heard today, hop on over to Instagram and send me a DM at Finding Freedom Financial. I'll be back again real soon, but in the meantime, go implement or take action on something you learned today. I promise your future self will thank you.